Thanks, Saul. Insurance is an important part of risk management that protects yourself and your family financially. It's a way to offset potentially catastrophic risks like serious health issue, accidents, injuries, property damage, and worst case, premature death. Insurance can seem expensive at first, but if anything happens to you, it is well worth it. We should all know how important health insurance is, given how expensive even routine care can be without it. A serious injury or a hospital stay could set you back thousands of dollars. There are several different types of health insurance plans, such as health maintenance organizations, preferred provider organizations, point of service plans, and high deductible health plans. Each plan has unique features that come with various premium amounts. If you are younger and or generally in good health, it may be a good idea to consider a high deductible health plan. This type of plan is the cheapest from a premium standpoint. However, the annual deductible that you have to pay out of pocket is the highest of these four types of plans. This plan also allows you to contribute to a health savings account or an HSA. HSAs offer triple tax advantage in that you can contribute pre-tax dollars, which reduces your taxable income. The money then grows tax deferred, and then it is tax free if used for healthcare expenses. This account can be used for medical expenses such as your deductible, or it can be used as another savings vehicle for retirement. These next two forms of insurance are especially important to consider if you have a family or other people depending on your income. Disability insurance coverage protects you and your family in the event that you are unable to work. Employer-provided disability insurance typically replaces about 60% of your salary. Disability insurance is often overlooked as most folks focus on securing life insurance coverage instead. In reality, you are much more likely to experience a disabling event that prevents you from working versus dying prematurely. A 2017 study by Group Market Share actually found that 1 in 4 Americans who are age 20 will suffer a disabling event before they reach full Social Security retirement age. Many short-term disability policies through a workplace offer pregnancy and maternal benefits as well, which is important to consider when growing your family. Life insurance is generally a good idea for those with dependents. Life insurance can replace income loss when a breadwinner dies, replace lost retirement savings, fund education expenses for children, pay off debt, or cover funeral or burial expenses. There are two main types of life insurance: permanent insurance and term insurance. Permanent insurance is exactly what it sounds like. As long as you pay the premiums on the policy, the coverage will last your entire lifetime. Term insurance, on the other hand, is temporary insurance that only covers a set number of years, most commonly 15 or 20. Term insurance premiums are cheaper than permanent insurance. However, that coverage does lapse when the term ends. Term insurance often makes the most sense for younger people. A common rule of thumb is to have at least 10 times the amount of your annual salary in insurance coverage. Now, this amount could be too much or too little coverage depending on your own circumstances. It's advantageous to work with a financial planner or an insurance agent to understand what type of and how much coverage makes the most sense for you. Other important insurance coverage that you should be aware of is auto and homeowners or renters insurance plus umbrella liability coverage. If you own a car or a home, or you rent and just can't afford to replace your possessions out of pocket, make sure that you're adequately protected. Shopping for insurance can seem like a really daunting task, but oftentimes, if you bundle these types of insurance with the same insurance provider, they offer you discounted rates on the premiums, which can save you money. Now, there are a number of ways to adjust your premium amount when it comes to these coverages. If you want to lower your premium, you may consider increasing your deductible amount, which would be the amount that you owe out of pocket if you were to file a claim. Now, it's important to have enough cash in your emergency fund to cover the deductible expense if you do, in fact, make an insurance claim. Another form of insurance to consider as you begin to grow your wealth is umbrella liability coverage. This type of coverage protects you from personal liability that may exceed your auto and homeowner's policy limits. Now, for example, if someone is injured on your property, or let's say is bitten by your dog and sues you, that umbrella policy could provide the extra coverage that you need. This insurance is quite inexpensive for the protection that it provides. Financial advisors typically recommend maintaining enough umbrella coverage to cover your net worth.